James said, I'm backtesting channels at the moment, seeing if I can figure out a tradable strategy. Any thoughts on how to create and backtest a channel strategy would be very helpful. Well, hard question to answer because we need more information. But it first starts off by asking you the question of what type of channel are you trading? There are two main types of channels. There are going to be horizontal channels. These are going to be your channels that just channel sideways, so they kind of go up and down, right? Your accumulation and your distribution zones, for you guys that are familiar with Dow theory and Wyckoff cycles. Or there are going to be your sloping channels, right? So these are going to be a downward channel, something like this, or an upward channel, something like this. So each of these channels gives different information. With your sloping channels, these are typically looked at as being deceleration patterns. So price action has come from a steep slope, like a big bearish move here, and then the slope grade started to decrease, and pretty much the market is losing steam. So off of this channel right here, which we would call a falling channel, we would expect a bullish reaction. The exact opposite would be from a rising channel like that, we would expect a bearish reaction. So in these two channels, there's a clear directional bias of which way you want to trade. I would only be looking to trade long on these. I would only be looking to trade short on these. With the horizontal channel, aside from any type of technical clue in a higher time frame, these are more neutral. These are kind of like triangle patterns or kind of regular triangle patterns where I have no idea if price is likely to go up or down. So there's two ways to trade these. One, you can trade support and resistance from side to side, meaning you could be a trader that after a certain amount of touches, you like to buy at the low and then sell at the high, and then maybe sell again at the high, and then buy and make profit at the lows. You can just trade the channel bounce back and forth. Or you can trade the breakout from the channel. This is what I personally like to do, where going back to that lesson I gave you on like decision points, the areas that I care about are going to be here, and nothing else in the middle matters. But if we get a break and close above this level, then I am predicting a bullish continuation. If we get a break and close below this level, then I am predicting a bearish continuation. So what I'm doing is I'm waiting for confirmation of the violation. I'm waiting for the market to tell me which way it's more likely to go, and then I'm looking to get directionally involved in that direction. So yeah, as far as your back testing, we can't even get into that yet, because before you can back test anything, you need